JJ, the CPA here. Hope you're doing well. A little bit of tax news. So every year the IRS comes out with inflation adjustments. With that, we can tell you a couple of things about it. But when these come out, then we are reminded, in case we forgot, that as we're approaching year end, we've got to start thinking about what are this year's taxes going to be? And more importantly, is there anything you can do about it? So a couple of things. First, with these inflation adjustments, just looking here, it's, things like the standard deduction, the earned income credit, the alternative minimum tax credit. I'm going to give you a link to the IRS notice that came out to it. So foreign income exclusion, et cetera, et cetera. But just a couple of notable things. So gift tax exemption is $18,000 in 2024. That means you can give up to $18,000 to somebody. It's not ever taxable to the receiver, but not a deduction ever, but wouldn't yield gift tax. Still have 7 tax brackets with 35%. 37% is the top one. The standard deduction is $29,200 for married filing jointly. And then for single, it's $14,600 in 2024. So that's the standard deduction or itemized deduction, and where the amounts have been ever since TCJA, the law that came into play basically in 18, with that increase into the standard deduction. Well, 90% of America doesn't need to itemize their deductions because you get the higher of, and for many, that standard deduction is higher than the itemized deductions. With that, I'll let you peruse that. But as we get to year end, a couple of quick things across the board of what you should be looking at for individuals, partnerships, S corps, and for Schedule C filers or sole proprietors. So let's just start with individuals. The biggest impact that you can look at, believe it or not, for starters, for where you stand right now is 2 things. Pull out 2022's 1040. It's okay that you're not familiar with it, you don't quite understand it, because when you look at it, you're going to actually go, well, actually, I do get it. But look at what were your taxable wages in 22 that are on that line item, and look at a most recent pay stub and go, well, how many pay periods do I have left? How's that pay going to shake out? Is it similar? Is it up? And the reasoning is then go, okay, well, now I'm going to look on the second page of Form 1040, and you're going to go, well, what was my total tax? I don't even have to tell you the line item because it says total tax, and then there's an amount there. Then right below that, there's a line item that says federal withholdings. I don't have to tell you the line number because it says federal withholdings. What was that amount? Why? Because now you're going to look at your W-2 and you're going to go, well, last year I withheld this and I made that from wages. This year, with then also going, well, here's how many pay periods I have left. Here's what I'm looking to make. Is that the same, more? And what were my withholdings for federal tax? Because that's right there on your pay stub. And at least right there, do a gauge. And then for you to go, well, it seems different, up or down. Well, I'm going to give you a link to the IRS website. I'm going to make a note for myself to the withholdings calculator. So the IRS has this really cool, easy to navigate software that it could be for a business owner too, but go in there and answer a few questions. Now you might go, well, I don't know how to answer that. Well, guess what? Because you pulled out your Form 1040, what you're going to now go, what is that? You're going to find it on your 1040, like other types of income. So do your best. Don't get frustrated with it. Or if you got a financial or a tax advisor, you want them to look at it. So make sure that you're having enough tax withheld, just so you don't get knocked in the head in April. It's fun to get a big refund, but that also means that you're just delaying getting your paycheck until once a year in April. The next thing is, when you're looking at the Form 1040, I want you to look for Schedule 1, and it's just going to be right behind the Form 1040. And on Schedule 1, the first page at the top is just other sources of income. So I just want you to look at that and go, oh yeah, I do have that income. What is it? Well, there's a bunch of line items. If you see a number on it, then you go, oh yeah, what is that? And go, well, and is that the same for this year? Is it more? Because see, a lot of income that comes there then on Schedule 1, like unemployment, S Corp income, partnership income, rental income, state refunds, right? That income typically doesn't have tax withheld with it. And that's another place you can get slapped right upside the face come tax time, because you're like, well, I made about the same wages. I had federal withholdings from wages, but dang it, I had this other income. It's not that you forgot about it, but it can creep up on you. Then what I want you to do is look at the rest of Schedule 1 and go, were there any deductions that I took last year? Like what? Well, don't make me do all the work. Get your Form 1040 out. The more you can sift your fingers through your own taxes versus listening. See, probably most didn't have the patience to get to here. It's just the way YouTube works, because they just are looking for an easy answer. They don't want to do any thinking, but the reason you're here is that you don't mind thinking a little bit. But just get your return out. My point is, be looking at it. If something doesn't make sense and you have a tax advisor, well, you can inquire. So the biggest thing to do first is what I call tax planning, which is what we're doing. Planning for the taxes that you think is going to be the case in April, and then more looking at, well, do I have enough withheld? Is it going to be that I'm going to owe? Do I need to make an adjustment to withholdings or a fourth quarter estimate? And then after that, there's a Schedule 2 and a Schedule 3. Those are kind of credits and extra taxes, but keep going. Behind there, there's a Schedule A. And that would only be if you're itemizing your deductions, because that's real estate taxes, state taxes, mortgage interest, charitable contributions. The reason I want you to look there is that if you've had a lot of charitable contributions this year, maybe you moved and gave away a lot of stuff, maybe you had a lot of medical expense. If so, I hope you're doing okay. But these are things that are itemized deductions. So maybe you're going to be able to itemize, but more importantly, to go, well, I'm getting close. I've got a lot more than a prior year. Maybe there's some extra things that I should be doing. Who should you call? Tax advisor. What would that be? Well, maybe you want to make sure you've paid up all your medical to get over the threshold and be able to itemize. Maybe go, well, I have my real estate taxes. And so if I'm getting close and I have a lot of medical, or maybe I have a lot of charity, maybe I should make sure I get my real estate taxes paid before year end. Also, in Schedule 1 that I told you to previously look at, you might see something in your tax picture that is a deduction for you. Like what? We'd need a 5-hour seminar. But see, if you look at your tax return, that's your best indicator. That's planning. Now, for you as a business owner, S Corp, sole proprietor, or partnership, you want to do one extra step to this. What do you think your net income is going to be this year? So here's how you would want to go about it. This is a great way that I do it. Is I go, okay, what's my business made in the last 12 months? And I get, it's like, what? Well, we know that we can pull a P&L if you're tracking it, which you should. And if not, then hurry and track it, figure out where you are, even if it's an estimate. But we go, well, I can pull a P&L from QuickBooks or whatever, and it'd be January through where we are right now. Do this, just alter the dates at the top to make it the last 12 months. Now, maybe it doesn't go right to the day, because normally with our clients, so just as an example, if we're in December and I want to look at the last 12 months, then I'm going to change the dates on the P&L to be 12/1 of the prior year through 11/30 of this year. So I have 12 months. And see, our numbers as a small business owner, which I am too, it's kind of our best indicator. But the other reason to look at that is that it will give you an indication of, well, what did you do last year? And the reason to look at the last 12 months is that it will encompass a full year. I know that sounds like an obvious, but what is a tax return report? A full year. What's a full year? 12 months, right? So if you're looking at a P&L for 12 months, that would be really helpful. Now, if you're in the kind of business that that's not helpful, then by golly, figure something out to go, well, here's what I've done year to date. How much do I think I'm going to collect? What am I going to spend? And then you're doing the same exercise. What was on the tax return, looking at your Form 1040, what was the net? Where is that? It's on Schedule 1. What was the net from your S Corp? What was the net from the C Corp? I don't know what line item it's on. You'll find it because it says it right on the line item. What was that net last year? Okay. How is the net going to look like for this year? Is it up? Is it down? What's the tax look like? You can use that same tax estimator if you want, because it has a spot where you can go, here's my other income. Because again, that's planning. Planning is, what's it going to look like based on what we know? Now, tax strategy is, what can I do about it? Well, the only thing you can do anything about taxes is spend more money. So when I have clients, and I don't really hear this anymore, but when I have clients and they're like, well, what can I do about it? Right? I don't want to owe, I'll do anything. Just going to have to spend money. So you have to make sure, well, does it make sense for me to spend money? And if yes, then I want to spend money on stuff I'm going to spend anyways. And I know there's a lot of tax advisors out there that I dare say might be a little lazy in this. And they're just like, well, you know, you're just pushing the expenses and pulling the expenses, all going to catch up with you. Okay, but are you writing the check, right? My point is that talk with your tax advisor. You probably don't have one that talks like that. Got to make it a little entertaining. We're talking about taxes, okay? But all I'm getting at is, okay, then what could I do about it? Now I'm doing a strategy. Well, you go, well, maybe I don't want to do anything about it. Maybe I'm down this year. Maybe I'm going to be really up next year. But unless you did the tax planning to go, well, where am I? Then you don't know if you actually should do any type of strategy or not, or at least what kind. Because if your year is way down, you may go, well, you know what, stuff that's not really due until, you know, mid-January, maybe I just wait till January to pay it versus year end, because I don't know that I need the deductions, or the deductions aren't as valuable as they would be next year. See, as we earn income, you know this, but our tax bracket goes like this. Our income goes up, but the tax bracket goes up as well. So like in this notice I was talking about earlier, just as an example here. So for a single individual, basically, you know, taxable income, the first 11,600, I'm looking at it because they just changed it due to inflation. It's at 12%. Then up to 47,000, that differential, 47,150, it's at 22%. Then 24, then 32, then 35, and 37. So as we make more, it just lands in a higher bracket. It doesn't mean that all the income is going to be subject to this higher tax rate. But all I'm getting at is that if this year you're like, okay, I'm staring down the 24%, but if I have a normal year next year, you know, I'm in the 32%. So you go, well, then maybe some of those expenses, I do it this year and it saves me 24%. So that 10 grand, you know, saved me $2,400, a lot of money. But that same 10 grand that I'm going to spend anyways, but waiting till next year, cash basis business, it's very rare people are accrual. But if you spend it in January, you go, but that 10,000, if I'm in the highest bracket of 32%, all things being equal, well, it's going to save me $3,200. So that's why you want to be smart on where you're spending your money as you get to year end. Now it's quite the opposite. You're like, wow, I'm having a big year. I'm looking to be in the 32% bracket this year. My normal highest bracket is 24%. So I want to spend 10 grand on something I'm already going to spend it on, but before the end of the year, because this year it's going to save me $3,200, where next year it would only save me $2,400. That's strategy. So it's not just to go, well, I want to pay the least amount of tax and I'll do whatever I can. It's about then going, okay, well, if that's the case, then what is there that you need anyways? Then it's not time to, you know, pull out the old proverbial Sears catalog and figure out, well, what else can I do? But I do talk with clients and I'm like, listen, I'm not talking about you trying to find something to spend money on, but is there anything that your business needs between now and maybe the summer? You know, is it a vehicle, right? Is it new equipment? Is it new software, whatever? And the only reason is it's the same thing, right? It's like, well, you know, if you're going to get it anyways, would it make sense to get it this year if it's going to save you more tax? Now, for many, right, I give it to the, well, you know, it's just all going to work out in the wash. Why do we want to even look at anything type of advisor? Because if you're in the 24% bracket this year and the 24% bracket next year, you could go, well, that 10,000 saved me 2,400 and that 10,000 saved me 2,400 next year. right? And then those that just love to be cynical about it because they want to talk like this and do taxes like this, right? They go, well, what's the big deal? Well, sometimes you go, yeah, but that's $2,400 I could save now. And I get it. Okay. That's then 10 grand of expense you don't have next year. However, this is where I can combat those that go, well, it's just not going to make no difference. Well, if you're in the 24% bracket next year and this year, because brackets are kind of, there's a lot of income between going to the next bracket, I would say, well, do you want to save taxes this April? Maybe a little more this April? Or would you want to save it in the next April? And most small businesses, okay, that are then thinking of cash flow and those kind of things go, well, I think I'd rather save it earlier. And you're right. You would have 10,000 in expenses. And then the dumb tax advisor that's dumb goes, well, but then your tax is going to be 2,400 more next year. And they wouldn't be wrong. Okay. But you have until the next year to either figure that out or come up with a different cash flow. See, it's not your tax advisor's money, okay? And just because they think something's a dumb idea, if it's only because they don't really want to do any work, they don't really want to plan with you, they don't really want to look at your stuff, they don't want to answer your phone call. And I'll tell you why in a minute, because I'm going to stick up for them. They don't want to do the strategy. Why? Well, it don't make no difference. Well, does it make a difference to you? Because if it doesn't, then that's fine, right? If you're just like, man, I don't even worry about what the balance is in my account. Just write a check. We're good. Whatever it is, let chips fall where they may. But most small businesses I'm working with, no matter how successful they are, they're like, well, how many chips are there? And could I keep more of my chips now? Because I don't know what next year's to come. I mean, will it be more? Will it be less? So I have a lot of clients that, we don't really do much at year end. We don't push and pull if it's the same rates. So it doesn't have to be that you're doing anything, but it starts with at least my client and I going, well, where do you stand? Let's do a little planning and then figure out what kind of strategy, if any, that we need to do. But I'm going to tell you this. I still have clients that go, you know what, though? I'd rather just do that now. Or would that make sense? So you don't have to do anything, but you should be at least aware. So what are a couple of things that you should be looking at in addition to that? Well, first of all, okay, you know that you're going to, let's say you go through all the numbers and you go, okay, I'm, I'm looking to owe about $8 grand come April. Do I want to do anything about that? Well, the next question I talk to the client is, what can you do? What we just had the discussion on. But then after that, it's like, well, what can you actually do? Like, you could do this, but can you? What do you mean? So I had a client this, long time ago, but they said, I'm telling you, JJ, I don't want to owe. Like, I want to do whatever it takes. I mean, I had to owe last year and I'm not doing that again. So the first thing I said is, well, you only owe because you wouldn't pay in any estimates. Okay. So I could be the best CPA and tax advisor ever, but if you don't pay in any taxes throughout the year, you're going to owe come tax time, because one way or another, you got to pay the IRS. Okay. So that's number one. You don't want to owe. Plan. What is it? Get paid in. Now, strategy is, do I want to do anything about that? But can you? What does that mean? Because the next thing I said is, Tim, you got like 15 grand in the bank. Okay. You've been paying down a lot of debt, which is awesome. Okay. But, principal's not a write-off. You got deductions in the prior year. So you've used up cash paying down debt. It's awesome, right? You got 15 grand in the bank. I mean, your planning ends at 15 grand. I mean, and then do you really want to spend every last penny? I mean, I hear what you're saying. It's like, well, what would that save me? Just rule of thumb, I'd tell anybody off the street, it's like, I don't know, a third. Spend 15, maybe it saves you a third, federal and state. So it'd save you 5 grand. So do you really want to blow 15 grand or blow it early or put yourself to no money in the bank to save 5 grand? Maybe. But see, I let my client decide that, okay? See, the ones that are like, well, ain't gonna make no difference, are, bless their hearts, the ones that have been beat up because they don't know how to say no to y'all. And they just bring on one more client. They're like, come on in, just come on in. I'm beat down anyways. Come in. You can come in and I'll do yours and I'll do yours. And then no one ever leaves them, even though they don't have any time to call you except this, and they got extensions, and they're just working their keisters off and they're doing the best they can. And then they're like, I don't want to do no strategies and planning. I already got enough to do. I don't need no more work, okay? It's not that they mean to be lazy, because actually it's probably the opposite, right? It's just how I talk in my head when I'm just having fun, right? So then just a few things in addition to that, right? So S Corp owners, hear me on this. There is no way around this. And if your advisor says, oh, that's a bunch of hogwash that you heard on YouTube, then fire them, because this is not hogwash, okay? Make sure that if your S Corp is paying your health insurance, meaning the S Corp's paying it, and you're more than a 2% shareholder, that has to show up as a taxable fringe benefit in your W-2. What does that actually mean? It needs to be added to your pay. And hear me, it goes in box 1. Now, if you're not familiar with this, you'd be like, well, why would I want to do that? Here's the deal. It doesn't get deducted as insurance because it can't. The law disallows, hear me fully, the law disallows an S corporation to deduct health insurance on the more than 2% shareholder. Now, the one that already turned it off, I got nothing to say, because they just basically are staying ignorant, okay? So I'm glad you stuck with me. Here's how the S Corp gets to deduct it. It goes on the wage line item because it's reported on the W-2. You still get the deduction. Like, well, why would I have to go through that extra step? I don't have the answer to why. All to say, the IRS is clear. It's in the law. There's court cases. You will lose every day of the week if you don't do that. So make sure you're doing it. Simple. Just make sure that it happens. You got to do it before year end. You know who really helps you with your payroll is my team at ADP. So, I got to plug them, right? Haley and Erica. Okay. Right. If you're kind of like, well, I just never heard such a thing, give Erica and Haley a call, right? You'll find the link down below. Schedule a call with them. The other thing is, if you have a partnership, okay, you should not be paying yourself wages. By law, you cannot. You're considered self-employed. So if you have a partnership filing Form 1065, this is the last year you're doing that. Stop. Okay. With that, though, if you are a partner and the partnership is paying your health insurance for you, okay, it needs to be a guaranteed payment. So there's not anything you have to do before year end, but make sure you're showing it as a guaranteed payment, because that's the only way that it's deductible. Also, for partnerships and S Corp owners, not Schedule C filers, not sole proprietors, and the ones that say, well, I'm a single member LLC. What I want you to know is, what form do you report your income on? Because those are the rules you follow. There's no form for the LLC. Well, yes, there is. That is somebody that's dumb. Okay, run. You file on a Schedule C, a Schedule E, a Schedule F, an S Corp, a partnership, or a C Corp, because when you're an LLC, you have all those options. There is no form LLC when we're talking about your income taxes. So my point in saying that, this doesn't apply to those that file a Schedule C. Whether you're a single member LLC makes no difference. If you're filing that form, this doesn't apply to you. But if you're filing an S Corp, an 1120S, or a partnership, Form 1065, and you're using a personal vehicle, right? So you personally own this vehicle, but you're using it on behalf of your business. The only way that you get a deduction, the only way, if you've been told different, I got 31 years, I'm a CPA, I teach around the country, there's only one way to get an auto deduction, And that is your business needs to literally write yourself a check for your miles. So you go, well, how many business miles did I have? Okay. Multiply it by the rate. And then you write yourself a check. Okay. So the reason I say you have to write a check is that many, they're with advisors and they're still kind of doing an old school thing, but the IRS won't allow it. But they're just like, well, I just do a journal entry, or we'll just reclass a distribution. You don't need to write no check. Why are you listening to people on YouTube anyways? I'm telling you, if you don't write a check, you don't get the deduction. So my whole thing is, why are we even arguing? Because here's the great thing about it. You're writing yourself a check that your business gets to deduct, and it's not taxable income to you. So why muck that up? Muck with an M. Why muck that up? Just write yourself a check. There's no reason to even debate whether you can or you should. I'm only saying that because even CPAs and EAs I talk to across the nation, many of them are like, well, we don't do that. See, we just do us a journal entry. It's too hard to tell the client, or it's too late to tell the client because we're already past year's end, and then we're not able to get the deduction. Or they go, well, I don't want to try and figure that out. My client's not going to have a mileage log anyway, so they just tell me what it is, and then I reclass some distributions. I'm just saying, if the IRS does inquire, and you're right, there's really low chance they do, but all I'm saying is you 100% won't get the deduction. You just won't. That person, that advisor will lose for you. So I don't understand why we have the debate and why I have to always, every single seminar, have this big discussion about it. It's almost like the IRS says to do this. Why are we arguing about this? It's a free check, basically. All right. I just want to double check that as of the recording right now, the IRS hasn't come out with the mileage rate for 2024, but it's 65.5 cents per business mile in 2023. So if, you're using a personal vehicle on behalf of your business, and I don't know, let's just say you drive 50 miles a week times 52 weeks maybe, and that's 2,600 miles times 65.5. Yeah, $1,700. I don't care who you are. That's a lot of money. Write yourself a check. And then what do you got to have? Mileage log. All right. A couple other things is, just as I had talked about with itemized deductions, so for S Corp owners, partnerships, and those filing Schedule C, it's really the same concept. Do you want to spend the money now, or do you want to spend it next year? What's the tax effect? Because all the other planning is just that. In terms of like, well, what else could I do? Spend money. But you want to spend money on stuff you need. You don't want to spend money to where you're strapped. It's not really a good idea to go into debt unless you're like, well, I know I got some big money, like literally coming in the door next year early on, I could pay this off. Okay. Or, well, I really do need that equipment. I got to go into debt for it either way. Okay. All I'm saying is that there's not much magic after that. Okay. There's some good tax credits, the solar world, but you know what it requires? Spending money. Okay. What about the vehicle and whatnot? It's spending money. So all I'm trying to give you as a theme to business owners is, so then spend money smartly. And you might get some other ideas. There's a few on TikTok, lots of them on YouTube that have some good ideas. At the end of the day, where do you stand? What can you do about it? Should you do anything about it? What's your ability to do anything about it based on cash flow and AR and whatnot? But it's better to figure these things out before year end. But see, no matter when you're watching this video, we do this exercise with our clients in the summer and in the fall and at year end. See, we're watching this. We're seeing if the needle's going up. We're trying to make plans, right? And we're not necessarily prepaying, but it's like, well, what do I need to prepare for? Should I pay in a little more? Should I not withhold as much? Should I plan that I need to do some things at year end, right? How do things stand so that we can do the strategy? So if you are at year end, well, this is when it's too late. No, hear me. when the year closes. So when is it too late to do tax planning for the year we're in? When the year ends, okay? You can do an IRA and an HSA and SEP. That's about it once the year closes. So paying attention now. So when you go to your tax advisor during your tax season, it's like, man, is there anything else I can do? It's like, well, I mean, did you spend any money you didn't tell me about? Because there's not really anything else we can do other than an IRA or a SEP for the self-employed. For those that have an S Corp, you got to have wages to do a SEP. So going into next year, then here's your next springboard. Where do I stand this year? But see how I've kind of talked about, well, where's next year looking? Because part of what I do with my clients as a part of this whole discussion is, well, what do we think next year is going to look like? And I know for a lot of business owners, it's like, man, I have no idea. I mean, I just have no idea. I mean, and so I don't have this discussion as much anymore, but I have a little fun. And I say, okay, well, in 2023, looks like you're going to gross, 150,000. You think you'll hit $1 million next year? Well, no. I mean, I'd love to hit but I'm not going to hit $1 million. Okay. I mean, do you think you'll make more in about like 10 grand? Well, yeah. I go, well, then you have some idea, it's not $1 million, it's not as little as 10 grand. So help me out. So here's how I help my client out. That P&L that I told you, that's for 12 months. We look at it month by month. And that makes it a lot easier, even for me, but a lot easier for a business owner to go, oh, okay. So last January I did that. In February I did that. So you're looking at the past to see what's coming up. And by looking at it, it's like, oh yeah, boy, February, we had a real down month. I don't think it'll be that case this year because blah, 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 blah. Or like, oh yeah, we were without a key employee there for a few months. So yeah, we're going to be different this time next year. But looking at it the month to month helps with well, what do we think next year is going to look like? Of course, none of us know to the penny. But with your tax advisor, what I tell clients is like, I just want to know within, if you're a business that's around 150 grand, like let's know it within around 10 grand because you're never going to know. If you're $1 million business, like let's know it within 50 grand or 100 grand. I mean, that's that's throwing darts, right? That's throwing horseshoes. It's like, let's just get something. Let's just estimate so we're not surprised. All right. Hey, I've got some free seminars that I do every month, thanks to ADP that you can sign up for. There's a link down in the bottom. And I've got some seminars that are lengthy and in-depth that you can purchase or just get instant access to. And doing CPE, got other videos for you as well. So for those that made it to here, I appreciate you. Hope you're doing well. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.